Okay, guys, 28th of February, Tuesday, 28th of February, 2023. So, yeah, here we are in the S&P on the daily bars. What we saw yesterday was a sort of rally recovering from Friday's selling. We are generally in a demand area in here, and the low is around the 66s, 67s. But what we saw is demand did come in yesterday, hitting on that trend and smack down on the close. So this morning, we kind of been a little bit above that closing price yesterday on the SPOs, and again smack down. So I am a bit bearish on these markets at the moment, and I think we can easily capitulate down. What I was talking to Jason Shapiro about was I'm bearish 4,000. If we can't hold 4,000, put in a good show on the 4,000 handle here on S&P, I think we are highly open to a capitulation to the downside. Why would that happen? Essentially, well, we have, the Fed are now pretty much pinned to continue to raise the rates. Terminal rate is now for June is set at 5.25 to 5.5%. That's pretty bearish. And I just don't know how these equities out of these constituent companies are going to have a really good quarter or 2 quarters or year under those sorts of rates, given that, rather than risking your money on corporate bonds or being long the S&P, you can get 5% at the risk-free rate, which is offered by the US government right now in a 6 month to a year T-bill, or T-note, T-bill, which is a 6 month bond or a 12 month bond or even up to a 2 year bond. The 10 year is yielding about 4.8% right now, something like that. So, it's really putting equities into the shade as a good risk asset right now, a good risk on asset right now. So, really, the kind of hot and sexy returns are going to be from bonds. And I really didn't think I'd live to say that. But, yeah, I think it's prudent with currently this talk of a recession coming. Now, what recession, you might say? New home sales yesterday coming out 8% month on month, beat on the expectation of 1%. So you could say, yeah, this is a soft landing. The wheels are down. You're about to have that nice little just bump onto the runway where there is no recession and inflation maybe starts to continue tapering, but PC certainly not telling you that. Anyway, I can hear people falling asleep in the background, so let's leave that and let's look at where we are in the S&P. I think short this thing from potentially a retest PVAH around 4,000, 4,007, and I think down. We need to test down onto 39.66, 39.28. And then once we get underway below 39.66s, we'll get this up here. I think once we get below the 39.66 half, pull back to here. I think, just, put on the snorkel because we're going deep dive here.
Ukraine conflict can be resolved
on the S&P. So I really like sort of selling in around kind of here and potentially maybe here, but I don't think the timing is right for that short. Let's see. So yeah, really selling from here or selling from down here, for this. So I'll leave that on. I'll leave those areas on for today. Here was the long and short we were looking for yesterday. Didn't really get to play on any of those levels. So, but that's the S&P. That's equities. Okay, we have some very good levels, CVAs to be looking at here in the group so far. Similar in the Dow, I want to really see that there is this demand, even better demand area in the Dow. And well, where are the buyers? Where are the buyers? You saw them yesterday, smack down off of the highs, and back down. We are here below 32 911s. Again, I know we're trading above the 200 SMA. It's very good support. I know. But yeah, maybe I am on the wrong side of this. Maybe, we are just going to dip and then drive here. But let's see. I think we have a high potential, if that happens, to just come back into the sort of range that we have pretty much here. Here on the Dow, sort of 33 treble fours to 34 3 6 sevens. Kind of, I think that's as you can see, a huge range that was traded out there, but we've not been able to hold into it. We bid up here through October last year, up into this range, held it all since on this demand area. Lovely buying coming in there, but we've broken down now. The last couple of days, we've broken down. Friday really driving us down there. So, look, we're going to trade what we see. We are going to trade what we see. I am currently short Dow overnight. I'm short stocks, Euro stocks that is, and long bonds right now. Long bonds hitting into the low here on the bund this morning, the low in the year, 132.60s. It happened hot, it happened fast, the way I like it. So we've faded that move, looking to get back above VWAP, at least trade into, say, 133.16s, 133.35s. I think if we can manage to not kind of shit the bed, I suppose, before the US opens, I think we can curl back up on bonds here and kind of not do anything too serious on equities to the downside before we open in the US. NASDAQ, it's really not lifting off of this 200 EMA here. So, I mean, you've had a couple of nice long opportunities there, but generally for the big swings, I don't like the longs on tech at the moment. I really don't. And then, of course, Euro and cable. Let's look at cable here coming in. Really, look at that. PVAH, I had to adjust my tool this morning because this low, I didn't trade this, but this low was all too suspect. And of course, adjusted the tool and I put in the value area high right there at that point. So yeah, lovely action here. Of course, that protocol deal done, the Windsor agreement, I think it's called, or a Windsor protocol. I don't know, the Windsor something. Look, I think we should be long Euro, long cable, short the dollar over this. And I think first destination for cable, one spot, 21.71s, get there. And then I think it's going to be further driving to 23.39s. FTSE doing very well in the background. Don't have the FTSE up here because I do not subscribe to FTSE data. But yeah, what we're going to be looking at though in the room, all right, to tell if we're going up or down on equities is going to be the VIX. It's going to be this, all right? And there's a certain way to read this chart, and we know how to do it here. Duggan Capital team represent. So pretty much 20, it's called a 21.17s, right? Is we need to hold there. And if we do, I think kiss goodbye to equities. I think we're going down for the big one. So that's essentially what we're looking at here in the VIX and equities. And oil, listen, I don't know what's going on with oil. I really don't. All we could see from yesterday is 75 handle. Lovely buying here. So we were live shorting this down to the P-Val, flipping it long back up to the 76 handle area. Sorry, this wasn't the P-Val. We were short the 76 area, and VWAP. I was actually I was short this and then actually got in again late. Down we went, flipped the trade, back up we go. And then I don't think I flipped it again short. And thankfully I didn't because we blew out here to then go back down to the P-Val and 75 handle. And then we're bid up out of there this morning holding VWAP. I think 76 handle should be good support today. Looking for the longs and get up and close this gap. And certainly first destination 77.10 above there. So yeah, that's oil. So really, technically, it's just telling me that there's buyers in 75s. I don't have enough pages to write the book on macro fundamental analysis on what the hell's going on with oil right now. But do check out Javier Blas on Twitter. He's the man. And yeah, along the bonds right now. So, okay, that's it. Pretty comprehensive rundown for a Tuesday. Watch out for later on. We're going to get consumer confidence out of the US at 3 bells GMT. And just to note this morning as well, Spanish harmonized CPI is coming out beat 6.1 over 5.5. That's pretty strong. Looking at the CPI year on year, 6.1 beat on 5.9. And the month-on-month 1% beat on expectations of 0. Prior was negative 0.2. So inflation ain't going nowhere in Spain right now. Okay, so watch out. All right, have a good one. Talk to you later. Cheers.
Apollo 11, this is Houston. You are confirmed to go for orbit.